Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will share my intraday process and how I will tackle Phase 2 to an FTMO challenge account. Traders are entering the market with no trading plan and expecting to be consistent traders. This only leads to a trader's downfall and a never-ending cycle of wasting live funds. Here, I will show you how I keep myself organized and what I will be doing to pass the challenge account with little stress. Stay tuned. Leave the indicators alone. I will touch on the FTMO account details for Phase 2 and the model I will use to be successful in passing the challenge account. Let's jump into the challenge account. The challenge account is a $10,000 swing account. I went with the swing account because I personally believe long-term trading is where wealth is made. For the passing requirements on Phase 2, you need to gain 5% of your equity. Here, I have $10,000 in equity and I have to gain $500. I also have a max daily loss of $500 and a max overall loss of $1,000. Once I start, I have no rush to finish as they give me up to 30 days to meet the requirements. Though the percentage asked of me is half of what Phase 1 is, many traders fail here the most. Many traders quickly rush through Phase 2 because they are overly confident because Phase 1 required more work. They ditch their trading plan and resort back to poor trading habits. This is the model I will follow to be successful passing the challenge account. The time frame that I'm going to be focused on is mainly the daily. I'm then going to be looking for the next high probability draw on liquidity. I'm only allocating 30% of my equity, and my psychological health is going to be keeping my mind calm, doing other things besides trading. Let's get into this. I'll be focused on the daily time frame. The higher the time frame, the closer to the overall trend I will be. I will use daily swing lows and swing highs as my guide to finding trade setups. The swing points will give me short-term momentum, which can lead to a trending market. The high probability draw is this that follows. Once the last candle in the swing is broken, I will target the high or low of the candle that broke it. There are many ways to go about finding an entry. For me personally, the two simplest ways are buying below midnight opening price or selling above midnight opening price. This may sound confusing, so I have two pictures or two examples on the right. You can see GU, there's a swing high formation. The third candle is broken by the candle that has a star above it. That candle that has a star above it becomes the high probability raid on its previous daily low. Here you can see the gold example. We have a swing low formation. The third candle is broken by the candle that has a star below it. That candle becomes the high probability raid to its previous daily high. Let's take a look at some of the examples. For this example, we're going to be looking at the DXY. Now we're going to look at a couple other currency pairs as well, just to be transparent. But normally one currency pair will give you a plethora of setups, very frequent and very often. So let's say we're looking for a swing high. We get a swing high formation here, right? And we're going to run it back to exactly when it's confirmed and it started. So right there is the swing high formation. Now what makes this a swing high formation? Because there is a lower high on the left and a lower high on the right, and the swing high, or the highest point, its low is broken. It's confirmed now. Now that's a swing high. This is the third candle in that swing point. This low is what I'm primarily focused on. I want to see this low get broken. There's no action being taken until this low is broken. So you play it forward. Now we got the low broken. Now we can take some action. I personally do not want to see the third candle in that swing high. It's high broken. I don't want to see this high broken up here. So I'll draw that out for you guys to see. I don't want to see the high broken. It makes it less favorable for me. If I see the high broken, then the low broken, I will move on and look at another pair instead. But once I see this happen, third candle's low broken by this candle here, this candle becomes the high probability raid candle. On what though? It's going to be a high probability draw on its low, the sell side liquidity. Because momentum is showing us, short term at least, that it's to the downside because of this swing high formation. Now, the next day, I'm looking for a setup. Like I said, the lazy trader approach. If you're looking for the sell setup, you're going to be selling above midnight opening price. Where you find that sell opportunity is up to you. But you need to know that the sell opportunity is most likely going to form above midnight opening price. So the next day, we play it out, and we can see we get the high probability raid. So it was a successful model. Now, if we scale down a lower time frame just to see what happens, scale down. You can see the 13th is that new daily candle right there. So we'll mark it out. It's going into a Sunday. And if you look closer, where's midnight opening price? Midnight opening price is here. And you can see how price runs above into a premium briefly and then sells short. So it looks like it runs above the Asian session high. So that's the Asian session high here. And then it goes short, running all the way down to the previous daily low. So that's your high probability draw on the sell side liquidity. So we have a swing low here. We'll mark it out in blue. And we'll bring it back to exactly when that swing low is confirmed, which is here. Now, what makes this a swing low by definition? Well, it's because there's a higher low on the left and a higher low on the right. That's what makes this a swing low. The middle candle's high is broken, so now it's confirmed. This is the third candle in that swing point, so we draw that out. Make this red. Now I need to wait for this candle's high to be broken in order for any action to take place. There we go. So this candle's high is clearly ran right through. This candle's high becomes the high probability draw. That previous daily high, because if you're going in to the next day trading, we're looking at the previous daily high, which would be this candle here. So this candle becomes the high probability draw candle. Now I'm looking for a setup here. If I'm looking for a buying opportunity, essentially running to buy side, I need to take any trading setup below midnight opening price to get me to this previous daily high. So we play it forward to see what happens. And as you can see, the next candle opens and it runs through that. Now let's just check it out to see what happens on the lower time frame. So this day was the 7th and that day was the 6th. So there we go, we got the 7th here. And as you can see, that high here was the high probability raid or draw. And if you zoom in, you find midnight opening price. That's MOP, so buying below that price point there. So up here, there we go, I just want to make sure it's proper. See, price comes down and then it runs higher. Now, many people may say, oh, I want to see it with the sessions on. Here you go. You can see it comes down, takes out the Asian session low, and it runs higher, taking out the previous daily high. Dollar versus the US dollar, AU, and let's say we're looking for a swing low. So we got a swing low here, mark it out in blue, and we're going to bring it back to exactly when it's confirmed. So that's that swing low. What makes this a swing low? Well, because there's a higher low on the right, higher low on the right, and this lowest point high is broken. So it's confirmed and solidified. The third candle's high is what I'm mainly focused on. I don't care about the low. I care about the high. Now, if the low is broken, then I'm going to nix it. I'm going to look at another pair and say that this is not as feasible or less probable, in my opinion, as my model personally. I wait to see this candle be broken. Now I can take course. This is now going to be the high probability raid. On what? The buy side liquidity above this candle's high. Not the low. I want to see the high get drawn to. That means tomorrow I'm looking for some type of setup. Like I said, you can take that lazy trader approach and buy below midnight opening price. Since you're seeking buy side liquidity, you know that the market is most likely going to drop somewhere below either the Asian session low or midnight opening price. And then it's going to run up and probably take the high out. Now, there are times where the high is broken before midnight opening price because we know the new daily candle starts at 5 p.m. New York Eastern Standard Time. That is something you're going to have to figure out with your own market experience, because I can't tell you every single scenario and how it's going to form. But there are times where the previous daily high is taken out before the IPTA midnight opening price. So let's drop down on the 15-minute time frame and see what happens. So you can see it is successful. It runs that. We drop down to the 15-minute time frame, and you can see here, look at how the Asian session, we'll put it right here at midnight. Right here, right? But we know the new candle technically starts here at 5 p.m. The new daily candle is already printed. Even though it's probably still Monday, Tuesday's candle is already forming. All within Asian session, all that. It's included in the daily candle. You can see how Asia runs out the previous daily high. But the midnight price point, right? The algorithmic true day range at midnight, Tuesday, what you're going to probably do is just wait for price to come below midnight opening price or the Asian session low. Like I said, it's not going to look the same every single day. It's not going to be simple and cookie cutter and as straightforward. Because everybody wants all the answers. But it broke the high before midnight. Yeah, it did. You have to live with that now. What are you going to do? You're going to drive yourself insane and crazy? No. You're going to still try and find a feasible trade setup. Now, this may be something you may not want to take because of your filter. You may say, I don't want to see the high broken before Asian. I want to see the high retained and not broken, stay unbroken until we get to midnight. Then I'm looking for the dynamic run up here. This may not be a setup that you like to trade because it doesn't look natural to you. Or you may not truly understand it. That's okay. That's okay. I want people to understand it's okay that it's not going to be one way that it's going to come at you. It's going to come in you in various ways. And after a while, you're going to collect the database and how the market moves, and you're going to be more strategic about what you see occurring. I would know what to do after this. I would know I have to wait for the Asian session low to get broken. I'm going to buy here, probably have a stop of 40 pips, and then try to run back to the Asian session high and higher. Let's see what happens after it as well. So just put it faster. And you can see, sometimes you catch a trending market, and it keeps going higher. This is why I like the model personally, because it's a quick, easy way to find momentum, and then you could potentially find a new trending leg. Now let's look at some type of buy setup. Sell setup, sorry. So let's just take any swing high that we see. Doesn't matter the swing high. Let's say we found this swing high here. That's the swing high. Boom. When is it confirmed? Right there. I gotta bring it over one. Oh, look at that. That's an example that I wouldn't use because bring it here. 1, 2, 3. That's the swing high, lower swing high on the left, lower high on the right. The candle's high gets broken. See that? I would look at another pair. That's it. Simple. I don't try to make it so complicated because people sit here and cry, I can't find anything. Here. Another one. We'll bring it back. Which one's higher? This one's higher. Is it? Yeah, it is. 1, 2, 3. This third candle's low. That's what I'm looking at. That's it. Wait for it to break. Boom. Got it. Ooh, and it was a dynamic one too. Small range to large range. Now this candle is the low that I need to target. There you go. Now, I'm not going to drop down a lower time frame because people are going to be like, but I need to figure out how to find the setup. That's up to you and your entry technique and what you're going to do when you look at the market. I know a lot of people like to look at other people and bounce ideas off of everybody, but what I see is not what other people are going to see or necessarily going to agree. Our eyes look at this and read this completely different. With risk management, I'm limiting my allocation down to 30%. 30% of $10,000 is $3,000. I'm then going to ideally risk 1% per trade, and 1% of $3,000 is $30. So I'm acting as if I only have $3,000 to trade with, and per trade I only have the max capital to trade $30. I'm targeting a 3-to-1 ratio trade or higher. This is going to set me up for longevity and having success passing these challenge accounts. I will not be worried about breaking the max limit or the daily limit because I'm limiting my allocation down to 30% already. Here on the right is a great example of someone using proper risk management. They're risking 2%. However, each losing trade that they take, they lower the risk by half. So out of 8 trades, they keep lowering the risk till they can't lower it anymore. And you can see from 10,000, they basically have majority of their equity left, $9,000 in change. This is a great trader using proper risk management. However, this is where the nonsense comes in to the trading community. People are being told or telling themselves to risk 10% or 5% per trade. You can see the trader that's risking 10%, out of 8 trades, they nearly wipe more than 50% of their equity. Quick. Devastating. They're going to have a short-term trading career. Same thing here on the 5% on the right. Starting off with 10,000, you risk 5% per trade, 8 trades are taken, then you're back down to $6,000 in change. That's not good. That's nonsense. Poor trading. Same thing here for 2%. 2% per trade, going down from 10,000 all the way to 8,000 in change. If you take another 8 losing trades, you're wiping this account quickly. However, the brilliant trader is risking 2% and lowering the risk each time. This makes sense. Stop making trading hard. Lastly, your psychological well-being is very important when it comes to trading. People think that their emotions have no impact on their trading. It does. If your emotions impact your actions are going to impact your trading. It goes hand in hand. Can nobody else tell me that's a lie? That is sound fact. If your mind is not right, you're going to be doing things in the market that you're not supposed to be doing. You're going to fall back into old habits. You're going to be risking more than you're supposed to. You're going to be revenge trading. You're going to be constantly checking your phone and finding the next setup and forcing setups. Make sure your mind is right before you log into your MT4 or whatever platform you're using. And then you trade. If your mind isn't right, excuse yourself from the markets for a bit. May it be a couple days, may it be a week, may it be a month. You need to do that because you're not here to waste time. You want to be efficient with your time. Stop wasting time blowing the accounts because you have no control and no discipline. And you're not satisfied in something else in life. I don't know what that may be. Maybe you got upset at your spouse. You got upset with your children. You got upset with your boss at work. X, Y, and Z. I don't know. But whatever it is, get back in the game. Woosah. Meditate. Work out. Go for a walk. Expose yourself to the sun. Do things that make you happy. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.